All right, excellent. We've got quite a group in here, so I'll start a minute early. Welcome to the Independent Investor Channel live stream. For anybody that's new to the channel, my name is Ryan. This is the casual 2 hours that I host every Friday to come on and get folks' pulse. And I know that a lot of people would probably agree that 2 hours is probably a crazy idea. It's kind of evolved into this. This is something I look forward to. Why is it that we hold this live stream? It's quite simple. There's been a slight influx in the independent investor channel subscriber community, that of which I'm extremely I'm very, very proud. I'm very humbled, but there's some folks that are making their way onto the message for the first time. And it is very, very important to me that we provide a quick summary of what the opportunity is regarding self-directed investing. So I'd like to take this opportunity to allow some folks to make their way into the group. I will be recognizing some channel creators that have made their way into the group. That's really just another layer of the community in the live stream. We absolutely want to invite anybody that is in the subscriber base or not into the live stream. There's a lot of expertise in this group. There's a lot of different philosophies in this group. And I contend all the time, no two portfolios need to be the same. They don't. Okay. You can seek your exposure however you want in the stock market. I talk all the time about being participant. You see how I kind of shy away from the word investor, because I think new people hear that. And for some reasons, the barriers to entry are so great that people justify everything under the sun not to be a participant, not to invest in the stock market, because seemingly they've got friends that have been burned in the past, have gone with financial planners, have done whatever it is that they've done, and somehow relate that to their situation. And I find this all the time when I speak to investors. So what a great opportunity. I mean, this participation in the live stream lets me know a lot about this topic and how important it is to spend a little bit of time with your day, throughout your week, throughout your months, spending a little bit of time and focus on your financial fitness. All right. Right now, as a culture, we are deficient in this category. And you can disagree with me if you'd like. Absolutely. We can strike up a discussion on this topic. But I typically have way too many people come into the live stream on every single Friday looking to become part of a movement. And you may not have to agree with my approach to the market. I've been with managed financial planners, 4 to be exact. I've invested ever since I was 15 years old. I'm now 42 years old. So I've done this quite a bit. And I've lived through a couple very staunch downturns in the stock market, absolutely, which gives me some insight on really trying to make sure that new investors to the market really understand what they're getting involved with. Okay. I've said many times the stock market can be a humbling place. And I know people look back at me and they say, what do you mean, Ryan? This is all roses. This is awesome. It goes up every day and we're killing it and we're making money. I had one of the best trading weeks that I've ever had this week. I was on fire. Everything I touched turned to gold. Now, I have weeks where it seems like I'm off my game as well. My long stayed long. I took some profit in some stocks this week. There was some really good volatility this week, conducive to some trading activities. I'll talk about what I added this week because that's always of interest to the group. But I just wanted to give my quick summary about the self-directed opportunity. Okay. And I think anybody who tunes in for the first time, you're going to have to hear the spiel. And for the folks that have been with me now for years, I see Noella just popped in here, who's a great friend of mine, just a ton of great friends of the channel who have popped in, Tim Tellers being one of those great friends of the community. But bear with me, guys. For you guys that have heard this spiel before, perhaps maybe I say it in a different way that makes you even think a little bit about what this opportunity means to me, and more importantly, what it can actually mean for you. Okay. Um, I do YouTube on my time. Okay. I don't do this for a living. I look to use and abuse YouTube. I'm interested right now to understand why my payouts are actually decreasing with this daily upload schedule. So the verdict is still out whether or not I'll keep that up. I'm very motivated to continue on with the daily upload schedule. I kind of like it, to be honest with you. And I think there's a few folks in the community that also do appreciate hearing from me a little bit more often than once a week. And I'm glad to provide that content as long as it's being received from the subscriber community, and y'all appreciate that. But here's the thing. You really have two choices when it comes down to the account that you choose, okay? Now, the method that you choose is going to be indicative of one of two choices, okay? You've got the managed choice and you've got the self-directed choice. The interesting part about those two options is that the managed option is the status quo. Okay. It's the one that every single time you turn on CNBC, you're going to see commercial after commercial after commercial selling this option. All right. This option is being promoted right now by a small YouTube channel. It's called the Independent Investor Channel. You may have heard of him. He's pretty interesting. He has actually done this self-directed option for the last 7 going on 8 years now. I'm pushing a $500,000 net worth, and I do so on a blue collar salary. Why? Why is that possible? If I've been with 4 brokers before of the managed variety, I would go through years where the S&P 500 was actually positive, and I would look at my account statement and find that I had lost $400 in the mutual funds that I was sold. Why? Why is that? How is that even possible? I'm gaining exposure to the stock market. I want to invest. I want to do the responsible thing and diversify and dollar cost average, which I was doing all of it, only to render a negative gain in the portfolio. Why? Why? It's because the self-directed option allows you to direct connect with the stock market. Make no mistake about it. The middleman that you'll pay for that level of service is going to be expensive. And for a lot of people, they do not understand the impact of those fees that are rendered within a managed account. I just had a very good back and forth with Gen X Dividend Investor, who's one of the best YouTube channels on right now. And that is not indicative of how big that channel is, because it's extremely small. But the thing I like about Gen X Dividend Investor is he's able to prove my point that the quality of content means a hell of a lot more than the size of your YouTube channel. Go check him out. He's legit. Anyway, back to my point. The self-directed option allows you to have more freedom and flexibility to invest how you want. It allows you to take control over your account. By designating that account self-directed, you're basically saying, look, I'm going to opt out of the fee structure that is typically affixed to a managed account. And that's really what it comes down to. So for all you new investors, all you folks that are coming in looking to get a little bit more educated on the stock market, I understand it can be a very, very scary decision. But ask yourself why those decisions are scary. Are they based on fact, or are they based on secondhand information that you've received and haven't validated for yourself? Make no mistake, the information that's pushed through on the Independent Investor channel comes via testimonial. This is stuff that I actually do. I'm about as transparent as I can possibly be on this channel, and I will continue to do just that, because here's the thing. I couldn't come on to YouTube and just declare portfolios just to declare portfolio. The very vain and unique aspect of my channel is what motivates me to do the channel. There are a lot of financial channels on YouTube right now. I'm all about it because we don't have enough awareness on this topic. And YouTube is a how to do something type of opportunity. So for folks that are coming onto YouTube, and looking to know how to do something, investing shouldn't be exempt from that. And I tip my hats to some of the pioneers who have made some of that opportunity happen over YouTube. Um, I just think we're getting a whole different wave of perspective coming through YouTube right now. I've mentioned Gen X dividend investing, who's in the group tonight. But I am very, very adamant about endorsing Joe Carlson as well, who I've been consuming the content. So a lot of different reasons why you'll come into the live stream. I try to facilitate opportunity. Okay. There's channel creators that come in here every single week. I make a point to make sure that those folks can get some recognition. If you're new, please identify yourself as a channel creator. I've already asked for some clarity, but I always give those guys the kudos, because here's the thing. If 10 or 12 channel creators come in every single week and offer different perspectives, well, then that's 10 or 12 different perspectives that can help me to some degree answer some of these questions. There's been some interesting questions already popped in here, one on Fidelity specifically. I'll get to it. But JMac Investing, who's a good friend of mine, that of which we did a collaboration a couple weeks back, very enjoyable, invests with Fidelity. Okay. So the more we can put our feelers out there from a self-directed perspective, and a lot of you guys are self-directed investors, you just don't know it yet, okay? You probably are. It's just more intriguing to you to take control of your own money. Quite frankly, I think a lot of the younger community prescribes to that type of thing. They don't really want people in their nookers in any capacity. Investing is no different. Okay. So they probably look at the tried and true methods in the stock market, the status quo, and say, you old fogies are freaking crazy. Are you kidding me? I can hold my brokerage account right here on my magic phone. I don't need that. Are you kidding me? Google will tell me anything that I need to know about any stock at any time. And I've got this guy, Independent Investor Channel, and many others who are helping provide from firsthand knowledge testimonial on how you seek out access to the stock market. And you start to soon realize that there is no different version of the New York Stock Exchange. There's only one. It's how you seek your exposure that is the absolute key. All right. I want to try to get to some of these channel creators, guys. Welcome to the live stream on Friday. This is typically a very, very enjoyable 2 hours for me. So I'm like a kid in a candy store because I love investing. I love it. I could do investing every single day, which I do. I monitor the markets closely for a hobby. Okay. I love it. It's part of my life. Okay. However, it's slightly shallow if I don't have the opportunity to share it with others. This is where the opportunity through YouTube comes full circle for me. When I have people come back to me and say, holy smokes, Ryan, you got me excited about the stock market. I sat across from you and you seemed like you were a genuine fella, which I am. I bleed genuine. Okay. It's not fake. This is who I am. This is who I am most of the time throughout my day anyway. But had a good exercise today. Had a good boxing round, ran my 3 miles. So I'm ready to rock and roll. I do have my chai tea this evening, back to my Oregon roots. I do have my chai tea. So fill up a drink of your choice. Adult beverage is preferred. I'll have one after the live stream, but welcome to everybody. I really appreciate you coming in and supporting the message. God knows, man, it's my pleasure to offer it for sure. Anyway, let me cruise up to the top here. I've got Hidden Freedom Investing, who popped into the live stream early enough. Welcome to you. Hidden Freedom Investing has been popping into the community tabs. It's really difficult for me to comb over all the new channels that are coming in, but if you spend the time to come into the Independent Investor Channel live stream, Gen X and Jason Mack and Financial Investor, who I also see in here, they can attest to my loyalty with regard to getting their proper shot out. And I offer it every single week. I do not miss. I may miss somebody if I don't recognize that you're a channel creator. For that, forgive me a bit, but I think it's really important to set aside who are those folks that are turning on a camera in front of them and sharing their message with the world. Everybody's different. Everybody has a different message, some better than others, as far as I'm concerned. I'm not one of those folks that accept all of the messages. I think some of the best content that's coming through YouTube, quite frankly, is coming through some of the smaller channels, no doubt about it. Ryan Scribner, Nate O'Brien, those guys are exempt from that statement. Absolutely, as I just think the world of both those guys. My personal faves right now that are pushing across some scary good content, and I mean scary good. Gen X Dividend Investor and Joseph Carlson. Those are my two faves. So if you guys are looking to spend your time wisely, kick over and check out their content. But Brent, thank you for kicking on at the financial investor who's been with me since we were a little baby channel. I guess we're still a little baby channel, but we're trying to grow the best we can and influence as many as we can. And we'll continue to push the message forward. I'm not going anywhere. All right. So let me cruise up here. I did see JMac Investing pop in right before the live stream kicked off. There he is. Appreciate that. So you guys know how I roll. If you guys have questions for these folks directly, feel free to reach out to them directly. I see a new channel here, and I typically take note of the new channels that pop in. I will do my very best to kick over and review after the live stream. That's actually what I do for about that hour or so. And I do see Luna's channel, and I am assuming that you are also a financial channel. So welcome to you. And I'm appreciative of your time kicking in here for the beginning of the live stream. We typically go for about 2 hours, so we'll see how your stamina holds up. I really look forward to this, but I do want to acknowledge and appreciate your time for making your way on here. I really actually enjoy seeing if you're, some of the female channel creators come on. I think my demographic separation on my channel is quite interesting. I think I've got about 96% males that tune into the message and 4% females. I don't understand that at all. I don't. I'm a staunch believer that females are significantly better than males at a lot of things, and I've met many who are extremely successful investors. And it's really nice to see. Sometimes the perspective can be heard from a lot of different viewpoints. And so I think that's really, really important, to where if I said something or somebody didn't relate with how I deliver the content, perhaps maybe they can tune into somebody else, and maybe they can get encouraged or get incentivized to start an investing program for themselves. And at the end of the day, as long as they're set up to succeed, I'm all about it. I don't care where the source of the information comes from. That's why I think it's important that so many people are offering their testimonial on how investing has impacted their lives. So I will be reviewing that channel as well. Thank you for coming on, and just give you a little shout out. Anybody that's in the live stream or reviews the content after I post, after we've gone live, please go in and help support this community. If they come in here and get my endorsement, we want to try to build these channels up as quickly as we can. YouTube has become a little bit more difficult to grow channels. So any type of share or any type of support we can render, we will. That's just the least. That's just the least that I can do for you guys to help support you guys in your mission. Okay. I've got a great friend of the channel who I absolutely he gets a shout out just because he's the one and only Doug Whitaker. And you want to talk about different perspectives on the stock market. Doug has been with me for a long, long time, and really awesome dude. Always has been supportive of my message. I think our differences in the stock market are like yin and yang, basically, which is kind of cool. But Doug is a really, really good trader, and I'm honored to have him in the group here. He typically sits back and drinks beer and laughs at all my funny jokes and all my dry humor, because I'm just absolutely hilarious, and I don't try to be. But he'll typically throw in here some stock picks. I don't mean to put him on the spot, but typically he'll share something if he ends up having a good week, and we're talking 200-300%. So it's interesting. I was up a few percent this week, so which is good. It's in the green, so we're happy. But anyway, I'm going to try to get to some of these topics I had dropped in here at the beginning of the stream. I've got Adriana coming in. I've got a lot of people representing from all over the world. I saw New Zealand representing, obviously, East Coast, West Coast, Florida. Adriana from the sunny state for sure, the Sunshine State. Um, Amazing. Your last video about 10 life-changing benefits of self-directed investing was excellent. So I offered that as just a summary of the content that I've really been fine-tuning over the course of the channel. And I wanted to spare the new folks to the message, try to streamline it a bit so they didn't have to go through a catalog of 350 videos. But I do build those to be timeless. I do. You could review my first video and find value in it. I try not to repeat too many topics, although I feel like there's some topics that need to be repeated. So I do that for the popular topics. But she also asks, hello, Ryan, what's your opinion about Webull? Is it good for new investors? Thanks. So everybody that I've spoke with or pulse in with over the channel is satisfied with Webull. There's a couple things that I do like. My understanding is that they do offer a Roth IRA, which is a good thing. Okay. Independent Investor Channel sponsor is affiliated with two products, First Trade and M1 Finance. Those are the two. They seemingly fit with the channel like a round peg. Okay. Now, I took on those affiliates at the time that entry and exit fees were still being charged by most all of the major brokers. The only way that you could get free stock trades was to meet certain incentive thresholds within the account. So these discount brokers were a lot more attractive. Webull, Robinhood, First Trade, M1 Finance, just to name the only four that I know of. There's probably a few more, but those are the ones. Okay. The reason why I didn't go affiliate with Webull, nor will I be, okay, is because going with any of those discount brokers, First Trade and M1 Finance, has become less attractive. Okay. The only reason that you would opt for an M1 Finance or stay with an M1 Finance or a First Trade is because you've used them and you're happy with them. Okay. The access to the market is the same. Okay. But the aesthetics of each platform are different. So if you enjoy the aesthetics of Webull, I hear it's extremely good. I hear their mobile app is extremely good. On the flip side of the coin, they don't have a desktop version, right? So you can't just sit down at your computer and enjoy a little bit more in-depth analytics like you can with M1 and First Trade, for example. Robinhood, same idea. Okay. So, you know, I just contend that the opportunity to get those free access to the stock market, the free trades, was so much more of an incentive to go with those discount brokers. Whereas now, why aren't you tempted enough to go and look at a Fidelity or a TD Ameritrade or a Charles Schwab? If I had it to do over again and I was a first-time investor, the reason why I'm spending a few minutes on this topic is because you're not the only one with this question. That's why I told you I would address it in the stream, because it's that important. This is really the big question. It'll avoid you so much freaking headache in the future if you can just pick that broker. If you're banking and you have checking and savings with the same bank, whether it be JP Morgan Chase, check out their self-directed program. If you're already banking with Fidelity, well, there you go. I really wouldn't justify going away from those major institutions, because now you're getting the bang for no buck. I mean, it's phenomenal. And I've heard nothing but positive come through on the Thinkorswim platform for TD. I know Jason in the group here with JMac Investing would tell me if he was unsatisfied with Fidelity, and it goes hand in hand with most of the opinions that I've gotten back on those major brokers. I'm with Merrill. They have some deficiencies, but for the most part, I'm a freaking happy customer. Very happy. Now, they have not gone no entry, no trading fees. And I don't know if they will. I don't. They're greedy. They're freaking Bank of America. You know what I mean? They can't let go of their roots. You know what I'm saying? Instead of just doing the right thing, it's all about the profit, you know? And good on them. That's why I own 100 shares of the company. But from an investing perspective, I enjoy Merrill. I don't see any reason for me who's established and I have all the accounts tied together, which is another reason why the importance of this question is valid in that you can save yourself a whole lot of headache down the line by doing your research, by coming in and asking these questions like you are. But I think there's less reason to go with the discount brokers now. With the introduction, every single one of them are going with no fee structures. And if you can get a self-directed account started with them, why not just opt for a major broker? And if my affiliate program hurts because of that, so be it. I could care less. I enjoy the affiliate commission that I've gotten, what little bit I've got throughout the course of offering those, but there was a very specific reason why I offered those in the first place. I was tired of having folks coming on the independent investor channel and asking me, Ryan, how do you get the free trades? And I had to tell them, look, there's a minimum of 25,000 in the account, 50,000, the incentive goes up, and 100,000. Most beginning investors don't have that. Okay. If you're starting with $1,000, $7 entry and exit can be a real disincentive to taking profit. And quite frankly, you should have the freedom to do that. All right. So I know it's a long answer, but I wanted to put some emphasis on you got to get it right because you're going to save yourself some headache. Anybody who's ever transferred and done a rollover, I have many times. Like I think people are too loyal to their broker. I've been with Bank of America for 20 years and I'm rooted in with them, but it is a pain in the ass to switch. So if you can avoid that, I would recommend doing your work and looking at the top tier brokers. Pay attention when we say, hey, Vanguard might not be the best option for you. I try to re-emphasize the ones that I really feel like are worth talking about. And it's usually a culmination of hundreds of opinions that come through the channel. And then I throw those back at you guys just as a service, right? Fidelity, TD, Chuck Schwab, Ally, E-Trade is another one that very good. So top tier stuff. Okay. Merrill's quite good. That's from me. But yeah, I think you're good not looking a whole lot further than the top 10 brokers out there that we talk about all the time on the channel. Is a killer question. Thank you so much. We have just broke the record for the live stream on Fridays. It only took me 68 tries. I'm looking up at the number of people in here. Appreciate you making your way in here on a Friday. Thank you so much. Now it started to go down. People are signing off. That's funny. Anyway, no big deal. Let me scroll up to the top here. I'm going to start working through some of these questions. I'm going to be a little bit more aggressive with getting my Q&A done for you guys, because that is, in fact, the nature of where I want my attention going. All right. All good is in the group here. Mystery Pie is so intriguing. Can't wait to have a discussion on it. See you at the live stream. Okay, so this is going to spark another couple minute discussion. I've left a mystery pie up in the top of this stream. I don't know if the links carry over when when I repost this to YouTube. So this may be your only opportunity to jump in there and check it out. There was a challenge put through for the YouTube community to go on and analyze this portfolio. I did a video on it. So I'll be releasing that. I made it through the entire video without naming the owner of the portfolio, and I would like it to remain that way. I really would. I don't appreciate being asked to review somebody else's portfolio. Now, I released my portfolio openly over YouTube, and if somebody came on and said, Ryan, I have some constructive criticism for you, here it is, I would love it. Okay. I have very tough skin. I invest how I want. There's no perfect portfolio out there. There is none. But I would never, ever go onto YouTube and say, here you go, investing community. Here's my big portfolio. Review it. I think that comes from a place of arrogance. And that's just my personal opinion. But you're welcome to go in there and check out the mystery pie. I used M1 Finance to break down and replicate the portfolio, so it is extremely accurate. You're able to see what the performance of that over 5 years has been, and it hasn't outpaced inflation, okay, ironically enough. And I don't mean to do this to embarrass the holder of the portfolio. I think you guys will find that the video that I threw down on, I also did not name names in the video that I offered. I actually offered some constructive criticism. But here's the thing. I typically don't like to offer a whole lot of constructive criticism for somebody that I absolutely am 100% certain will not take one piece of the advice and deploy it. So they will have to learn their lesson the hard way, and that is fine. That individual will be one of plenty who will absolutely learn the hard way in thinking that the stock market just goes up every single day and that you can just frivolously throw a bunch of growth into a bunch of stocks, because it's not a portfolio. It is not. Okay. A bunch of stocks that add up to 11 is not a diversified portfolio. I think the rendering and the dividend yield is 75 basis points, which is anemic at best. And there's some work there to be done. I talk about that in the video that I'll release this week. You guys are welcome to go check it out. That's in the top there. That's really all I will say on the live stream about it. Certainly, it's meant to provoke some conversation, but at the with the idea of actually providing some level of advertisement for the owner of this portfolio, you will not hear me say the owner of the portfolio one time. No way. Forget it. Because I was slightly offended by being asked to do such a thing. Okay. And I'll probably be the only one. And I'll probably have people come on and be like, "You're mean, Ryan. You're rude. He's just trying to do the right thing," or she. Okay. Not to be gender specific, but I think we need to be a little bit more open to criticism, because not every method of investing in the stock market is going to render results. I was going to say correct, but here's the thing. If the holder of the portfolio feels in their heart that what they're doing is correct, it doesn't mean that because they're really excited about their portfolio, it's going to render X results. It doesn't mean that. You can wish your portfolio to the moon. You want to know how much that's going to influence your portfolio? Zero. The stock market does not care how you feel about how hard you've worked on your portfolio. It does not care about the opinions of a bunch of people on YouTube who are running commentaries trying to bring people together on the investing topic. It does not care. The stock market is going to do what it is that it is going to do. And that's some realism for you from my experience. Okay. Hope that resonates, because you can really learn a lot from those little insights and little nuggets that I give. But offered that in the group here just as a kind of an introduction on anticipation of that video coming out this week. It'll be fun. It's rather long. I think it's about 20 minutes, but I give some fundamentals, and honestly, if the member actually watched it for 20 minutes, they'd probably think long and hard about what they're doing. I know that not to be the case. All right. Good stuff. Tim Teller says, "Glad to see it. Scheduled. Wouldn't miss it for anything. It's my Friday entertainment." Well, that's awesome. You get to watch the live stream free of commercials. That's kind of cool. When I upload that to YouTube, excuse me, I don't control the amount of commercials. I just don't think YouTube knows how to handle somebody like myself who comes on and offers a 2-hour live stream every Friday. So they dump like 8 commercials in it. I could probably figure out how to throttle them back, but I don't. I just allow it to go live, and that's just the way I roll. That's totally fine. For you guys that want to consume the content, you will, because I put my heart and my soul. You get my 100% attention to detail on these live streams, and you get my best effort every single week. You guys, I know that I do this for you guys. My work in the stock market is done. It was done today. I'll share some of those moves today, some interesting moves I think you guys will find quite intriguing from the portfolio. I'll roll those out after I roll down through. Bob Wright is in the group, who's a great friend of mine, great friend of the channel. He always reminds me of home because it says it's freaking raining out there in Oregon. Anybody who's been to the Northwest knows what's up. That's home for me, baby. Almost brings a tear to my eye, man. I miss it. I'm about as far away as I can possibly be from Oregon right now. That's all right. But there was a discussion back and forth about what they were doing with REITs, which the VNQ I took some profits this week on the up, bought back into it on the down. So basically took V&Q into a trading. For you guys that don't know, V&Q is the Vanguard's REIT, real estate. So one representative of a specialty ETF, basically from Vanguard, 10%, excuse me, 10 basis points of expense in that specialty ETF. It's one of my favorites. But also throw in BND into that discussion as well. I'm an owner of BND. I will be rolling out my bond portfolio again for a review. I hope you guys don't mind the portfolio reviews. I think they're fun. I don't want to get redundant on them. I'm very, very cautious about pushing out too much blah, 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 blah. And you guys have seen the portfolio a bunch, but I do that to show what's possible. There is underlying intent to why I do that. It's not to get 1,000 views per video. It's not. Okay. It is to provide transparency to the subscriber base. If you don't like the message, then unsubscribe from the channel because I really don't care. I want people on my channel that want to be here. It's that simple. All right. I've got investing with Aaron, who's turned in tonight. He was one of the first ones that pop in. I just saw a ton pop in there at the start. So, investing with Aaron drops a line. Is also a channel creator as well. I did have the chance to review some of his content, and it is very good. So, if you can pop over and help investing with Aaron, bump up a few of those subscribers, that would be awesome. That would be a personal favor to me. I don't charge you to buy a ticket for the live stream, and so there's my payment for me if you can go support Aaron. But he says these E&P stocks once again getting whacked. Even the oil majors are starting to trend down. Oil's been a real downer in the portfolio. The only bright spot with owning oil, quite frankly, and I'm a believer, oil, like some other sectors or especially subsectors, you guys know I'm not a big fan of cruise, not a big fan of autos. Been kind of off growth for a while. I'll disclose my growth buys today. I bought some pretty big positions in 2 stocks today. Hell, I'll just tell you what they are. Facebook was one, and CRM Salesforce, 2 of my absolute favorites, Google being my top 3 in growth. But I did not buy Google today. I figured that was good. That's where I wanted to be. I split them in both accounts, Facebook in the one Roth IRA, and CRM Salesforce picked it up at 144. Freaking bargain. I'm all about it. Big positions, not screwing around. I think 30 share positions in both. I believe 30 in Facebook, 30 in CRM Salesforce. I'm not really sure why I've been provided this opportunity to enter into Salesforce specifically. Facebook has got some headwind. They're just going to have to weather it and get through it. But I see Facebook well over 200 here within the foreseeable future. And it is an investable growth stock. So valuation is there. I'm not so sure valuation's there on CRM Salesforce. However, it is a very, very profitable company, and it's a space that I didn't have a whole lot of exposure to outside of Microsoft and the other portfolios. So matching that up with a trillion-dollar cloud play in Microsoft, CRM Salesforce on the growth side and the other, you can kind of see the method to my madness. That's what we did today on the growth side of the house. I'll disclose the dividend names because it's pretty complex what I did with some of the movements this week. Like I said, everything I touched was gold, and I'll be the first to tell you when everything that I touch turns to poop. I really will, because I don't care. But I was calmly on fire this week. It was pretty awesome. Almost pushed the 2 portfolios, 3 combined, up over 230,000. So flirting with that $250,000 mark just in the 3 investable. That's not counting all the other stuff. That's just the 3, the 2 Roths and the brokerage, the 3 primary accounts that I talk about all the time. We're killing it. We're killing it. Looking to share some of that success. I agree with you. I'm holding long. I entered back into some Marathon Petroleum today, about a half of what I had for the position before. I just see the stock continuing to go up. I don't know if ExxonMobil can go any lower. I think ExxonMobil's a buy right here, and you can stone me if you want to, but I think ExxonMobil would be the one that I'm most excited about. Chevron, I still have a token small position, 10 shares in the other. Royal Dutch share, Class A shares, I still have a monster position there. And just bought too much at the wrong time. I'm replying to Investing with Aaron's comment there about oil, and I've been watching oil trend down now for quite some many months, if not going on about a year and a half anyway, based on what I've been seeing. He alludes to it being trending down right now. I've seen it for much longer than that, and I think it has to do with the old ownage of supply and demand. It's very simple. There's too much supply. They're way too efficient with fracking now, and it's putting so much supply on the market. We really don't have to rely on. You notice how it kind of remains a little bit steady as well. There's been a few geopolitical events that have occurred over the last couple months as well, and oil just holds true. It's just kind of blah right there. Um, but with that said, don't have an enormous amount in the portfolio. I'm a little overexposed to oil right now. That's fine. I'll sit on the fat dividend and wait for it to turn north. It's totally fine. I'm not overly concerned. I was a little bit tempted to double up the position on ExxonMobil because it's getting a little bit ridiculous. But we'll continue to monitor it. Who knows? Maybe it ends up in the 50s and gives you guys that magic entry point. But what is it, 5, 6 on the dividend, something like that? I'm satisfied. I mean, I'd rather own ExxonMobil at this price. Price to itself is quite attractive. Same thing with Johnson and Johnson. But ExxonMobil, I'd rather own than, let's say, a bond, for example. I'd take the 5, 6 and maybe a potential of ExxonMobil pushing back to 100 at some point, whether it be next year, the year after, who knows? If the election happens the way that I think that it may, we may be okay. If there's a huge surprise in the election, oil's in trouble. It's in trouble. So that ought to be fun. That ought to be fun watching my holdings in oil go into the tanker. That's okay. We're prepared. We're prepared to take them into a downturn. That's fine. Welcome, Aaron. It's great to have you in the group, man. Good stuff. We may push 100. Every time I notice the group here for the live stream on Friday, we're pushing 100. That's pretty cool. I've never broke 100 in the live stream, but who knows? Very robust group in here. All good, says Aramco IPO or postponed. I wonder why. I don't know why. That'll be one that I'm looking at closely. I will look at Aramco. I typically do not get into the habit of investing in IPOs. I think you'd be kind of crazy to do so. And there's an IPO in the mystery portfolio up top. You won't be surprised. It's Uber. And I think Uber's an awesome company. I just think it's a dog stock. So, put your money where you will. You have the freedom and flexibility to choose your investments as you see fit. I don't understand the rationale behind having so much stock in a company that's not profitable, and especially two in the same portfolio. My God, I mean, if you're investing in two portfolios, split it up for God's sake. Cap it at 5%. Be responsible. Don't put so much in a company that's extremely vulnerable to litigation, going through litigation as we speak. You know, um, Tesla's another name, perfect example. Love the company, love the product, hate the stock. Sorry. If you're going to be an investor, go ahead and invest. The risk may pay off for you in Tesla. Okay. It just might. But understand the level of risk you're taking for that payoff. Okay. And understand that there is a downside. There's a downside. A lot of people have to learn that lesson the hard way. And I don't wish that upon anybody. But from an investing perspective, no way. I'd rather own Coca-Cola. Had a phenomenal quarter today. Reported was up nicely, 50 shares in the company. I'd rather sit on Coca-Cola and get paid the fat ass dividend. I'm good. Thank you. I don't drink Coke. I don't smoke either. And a lot of you guys are into Altria and Philip Morris. Good call on Altria. For you guys that shared that last week, I kind of gave my morale twist, and that of which should never enter into your stock buying philosophy, but it does. It does for me. And I thought, wow, that's a little bit crazy going with an Altria at this point with everything coming out 33 related deaths right now to vaping. It's a habit I don't understand. I know there's people in the group who probably do it. Please stop. Please. All right. I'm not a hypocrite. I used to do it. Okay. You can quit. Okay. It's all upstairs. Pick a different habit. How about investing? How about guitar? How about physical fitness? Right. And you're all looking at me. Yeah, sure, Ryan, sure. I get it. I'm not your dad. I'm just kidding, but that's my health tidbit for the night. Quit that shit if you can. All right. I love you. I'd like you to stick around for a while. All right. It's important, guys. You only get one shot at life, man. The quicker you figure it out, the better off you'll be. Devote your time to something like this for your habit. Invest your time in things that are going to actually get to you to where you need to be. With that segue, I will mention this as a topic that I wanted to mention. I made another video. It'll be rolled out this week as well on schedule with regard to a small piece of lesson that showed up in a Joe Carlson video, and it was titled "Why You Are Not Rich." I hate to always have you come on to the Independent Investor channel and I farm you out, but when I review content that I review, then I reviewed it again. Then I showed my wife and I reviewed it with her. Why? Because it was good. It was really good. It was talking about the different income classes, low, middle, and high income earners, and the vicious cycle that we talk about with regard to the inflow and outflow of our money. We get our paycheck and we blow it all. We get our paycheck and we blow it all. Now, if you're a low income earner, you usually get that paycheck and really struggle to meet those ends with regard to just your sunken cost, food and fuel, right? Those are the things that you have to get back to work and things like that. If you ride a bike, great, but you still have to eat. Okay. And people struggle with that. He talks about the dynamic of going from level to level, being a low income earner, and the solution to that being earning more money. Okay. Stepping into the middle income class, which is where I am currently. This is the really interesting phase in that a lot of people in the middle income class think they're rich. Okay. He talks about this. I'm not going to be redundant, but I was able to give my 2 cents on this topic, and he was right on the money. Okay. These folks that are in communities owning houses that are $500,000 with the $70,000 truck in the driveway. If you are one of these people in the community, I apologize ahead of time if I'm offending you. However, if you consider yourself rich and you do not have two nickels to rub together, you may potentially fall into this category of the vicious cycle, taking your income and allowing that income that comes in to be consumed by your liabilities week in and week out, depending on when you're paid. Doesn't matter for the vicious cycle. Doesn't matter if you're paid every 2 weeks, right? You have the big home mortgage and you have the big home payment. You're married to your beautiful wife or your beautiful spouse, and they've got to have a vehicle as well. So there you take on 2 car payments, okay? And the inflow seems to go really fast, and you're left with $300, $400, $500, maybe $1,000 for groceries for the month. That's it. Inflow, outflow. Inflow, paycheck, outflow to liabilities. And Joe does a really good job of talking about what makes somebody rich with regard to breaking this vicious cycle. And I thought it was extremely smart, and it really validated a lot of what I actually do to give myself some credit. And I know there's a lot of folks in the group who do this very thing. No matter where you are on the income scale, low, middle, and high income earner, you can be in either one of those categories and allow some of that inflow, the earned income, to come in, and you circumvent that and you rewrite that routing of some of those dollars, paying yourself first, sound familiar, and put it into what's considered the asset category. Asset category, I break down in 2 different ways. Number 1, stock. Number 2, real estate. The difference between stock and real estate is that anybody can really participate in the stock market now. We've made it that accessible for all people. Your own personal barriers, you got to get over that, okay? I can't help you get over the psychological. Well, actually, I can. I can help you with that, okay? I can provide you the incentive to be like, wow, holy crap, I can do this on my own. I really can. This is awesome. Yes, you can, okay? It can take as little as $25 a month. If you think I'm BSing, I did. That's what I started with. So For the low income earners that are making those ends meet and they're saying, God, Ryan, I don't have any money, man. I'm having a hard time. I know people who do it. Okay. I know people who come to me, and some of those folks are the best freaking investors out there. Why? Because they are hungry, and it drives them crazy to know how important it is to intercept some of that inflow before it goes to liabilities to putting it to assets. Okay. And I furthered discussion and talking about those assets in there and how the idea is to foster those assets to be able to do a multitude of different things. We talk about dividend reinvestment, but have you ever thought about that as a self-funding mechanism within the assets bucket? Okay. We turn on dividend reinvestment. What if we turn it off someday and we allow that spigot to maybe fund the lifestyle that we choose maybe down the line? You ever think about that? I do. Yeah. So I've got all my stuff being paid into. I take that money that goes directly in there, and I've got the money that's funding itself. And you guys know that I strategically take the YouTube earnings and use that YouTube earnings, which for me is a business. So therefore, it is an asset that funds my other investment bucket. Awesome. Joe kind of validated that for me. And I thought there was something that was missed a little bit. He's very, very um, detail oriented in his conversation, but I thought it was really, really important to mention that those assets have the ability to kind of improve on their own. You just foster them along and allow them to grow on their own. They can fund each other. They can fund additional assets, especially on the real estate side. And I'm not talking about you folks that carry a mortgage. I'm not talking about that home situation being 100% of an equity of an asset. Okay. Got to be careful with that, because your home mortgage typically for a lot of people is the big chunk of that income. So a certain percentage of that is a liability. Sorry. But the equity that you own in your home, depending on what you do with that money, could become or leveraged into an asset category. So really important to think about those levels of thought. And I thought it was worthwhile. All the credit goes to Joe, certainly, for just turning me on and allowing my thought process to carry through and explain what it is that I saw by his very, very good tutorial on why you're not rich. Okay. And I sometimes cringe a little bit when I hear that, because I think a lot of people don't invest because they think, okay, I'll never become rich. Get that out of your mind. None of that matters. It doesn't, you don't invest to be rich. You tell me what that means. Okay. And then I'll tell you why you should be looking to invest. And it has nothing to do with being rich. Okay. Financial security is a small, shallow aspect of your life that if you get under control, it can add so much benefit to your life, because lots of other stuff will fall in place. You'll be less stressed. You'll worry about making ends meet. You'll be able to take advantage of opportunity that you wouldn't be able to take advantage of if you didn't have that stuff licked. You're able to handle unexpected expenditures when they come up, right? That's the beauty of it. And money, the shallow relationship between you holding the money and satisfying a debt obligation is shallow in my mind. It's just the ability to do that because you've acknowledged how important that is to build up, get right, and then focus on other stuff is legit. That's where the riches comes in. And I think a lot of people, man, they just look at the shallow definition of riches and they'll never become rich. So I'll be the first to tell you, get that out of your mind. Okay. For a lot of people out there, they need to hear somebody like me say, you won't be rich. Let it go. You won't. Okay. Not everybody achieves riches, whatever that means, in their life. Okay. It's up to you to determine what that's going to be. All right. So I'm going to cruise on down here. That was a really good conversation. I had, does Fidelity charge extra for holding Vanguard funds in one of their accounts? And I don't believe that to be true, but I did try to tag Jason Mack into that, J Mack Investing, who's with Fidelity. So if you can hit that XLE thread for me and let me know, I don't think that's the case. But I didn't want to speak out of turn because I'm not a Fidelity owner. Okay. I've got Terry Harris in the group here. He's joining from New Zealand Saturday afternoon here. Just goes to show the beauty of YouTube, where I can sit here and talk to somebody from the number one place on my bucket list, which is New Zealand. I've had the pleasure of meeting one person in my life from New Zealand, and they were the nicest. He was the nicest person I had ever met in my life, man. And he was like, "Ryan, you got to go." So, and I will. I will someday. This is one of the small aspects of why I invest. Remember, you do it, you forget it, you get it right, and then if I want to take a vacation, I can. Wow, amazing, that connection, right? And we would be great to see you this way. That'd be awesome. Kind of cool to bring people together too from around the world to come in and talk about a serious topic like this, because on a serious note, lack of financial savvy can be something that it can be a real heartache later on in life. And I know there's folks out there that really struggle, but it breaks my heart. A lot of people, they say, if I had only known, if I had only known, if I had only known. Okay. And some of you guys might be wondering why the hell I started this adventure 3 years ago on the Independent Investor channel. And really, that was it was an attempt to answer that very question sooner than later for a lot of people in their lives. And if we could get to those people, then so be it. At least I was doing my part. You know, I know I'm not going to get to everybody. I understand that, but at least we're putting that message out there. Why do you think I come on here every 2 hours, every single Friday, and look forward to doing it? It's a lot bigger than me. It's a lot bigger than myself. It's about intervening. It's about that interception of that life that is destined for mediocrity, and potentially we put them on a path toward a little bit greater financial success. I can't change everything, but the financial stuff it's pretty controllable, man. It really is. I don't buy into this whole like you're destined for success BS. I don't get into any of that cliche stuff. I just tell you the nuts and bolts of what you need to do, and then it's up to you to deploy, because I can't hold your hand the whole way, but what I will do is show you the way. I'll show you how I do it. And the difference between my program and a lot of programs out there is my program's scalable. You bet. You bet. Anybody can do, learn, deploy, and empower themselves to do this stuff. Anybody, in whatever form or fashion, or whatever size and scale you choose. Absolutely, 100%. Anybody can do it. You just got to get over those barriers. You betcha. Doing a couple reviews on the M1 Finance Opportunity and First Trade. I'll be rolling those out this week. I'm doing that to prove a point. I'm doing it to prove a point, not with monopoly money, but with my own money. Trying to build both of those accounts up to the $10,000 mark, which is another one of the many barriers that so many new investors succumb to when they're looking at the investing landscape. And they invest that first $1,500 and it doesn't go anywhere, and then they come onto the investor live stream. They spend 2 hours with me, and they devote that time only to have the next week roll around and that account goes down $100. One tenth of their account is gone. They've lost the money. And it's like, why the hell am I doing this? I've been doing this for 12 days. I've been doing it for 12 days. And that Ryan guy, he was really excited about investing. He was just fired up, and he got me fired up about investing. And here I am. I'm down 10%. I'm really not happy about it. I've been investing for 12 days. Where is my payoff, Ryan? And this is the deliberation that new investors go in when they're looking at that first $1,000, man, and it doesn't move. And it doesn't move for months. It doesn't move for months. And you're like, holy moly, this is crazy. I'm funding this. I'm hearing this dollar cost average program. I'm going to kick that up. I need to infuse this portfolio a little bit, man. I've got to deploy something to get it going. Boom, 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 and deploy it. Pop, 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 pop. And we're chugging along. In 6 months, boom, you got the thing up to 1,500. You know what I'm saying? And then a bear market hits, and you're down 20%. You're almost back down where you started. Okay. This is why it is so difficult to get people to that first $10,000. It's the most difficult obstacle you'll get to. I remembered when I hit 10,000. I do not, trust me, for the love of God, I do not remember when I hit 100 grand. I don't remember, because I didn't care. The difference between $100,000 and $10,000 is I knew for a fact I could not get to that 10,000 mark, and I did it. The $100,000 mark, I knew for a fact I could get there. That's the difference between those two. So that very psychological barrier is something that I'm trying to break through. First trade is up to 53% toward that goal. First, M1 finance is a little bit more close to the vest, indicative of maybe a low income type of portfolio, somebody that's going to break out of that income bracket later on down their line, but is maybe starting a little bit early. That's a $25 dollar cost average program. So something that I'll roll out this week. The videos are already shot. They're already done. They're ready to rock. But I do that for you guys. I don't do it for any other reason other than if I'm going to be an affiliate with the program, I need to have an account with them so I can speak intelligently about the opportunity. And they're both solid. They're both good. They both have their deficiencies, but I'm very clear and open with those. There's no perfect broker out there. There's a few that are close, from what I understand. TD, Fidelity, Charles Schwab. Charles Schwab is right there, man, probably close to number one. I don't know if Jason can chime in and let us know, but I think Fidelity's up there as well. And TD Ameritrade. Those are probably the top three right now. But I don't want to speak specifically because I don't have my accounts with either one of those three brokers. Okay. All right. The one and only Bob Whitaker's in the group here. Awesome. Hope you both had good trading weeks. Yeah, I've already bragged mine up. I'll offer the picks here. We just crossed over the first hour. It seems like I've been doing this for 5 minutes, and that it just upsets me because I only have an hour left. You guys see, I haven't stopped talking. Well, I've taken a few drinks of chai tea, but I haven't had a chance to roll out the stocks that we were able to add back in. These are indicative of some trading. So there was some volatility. It was down big this week and it was up. It was down big today, which was nice, actually. It allowed me to put some positions back into the portfolio, which I did. Okay. CVS, we took on a swing. We added the 30 share position back in. Marathon Petroleum, I think we stepped in a 50 share position in Marathon Petroleum. I declared in the thread earlier that I doubled up my position in ABV, ticker symbol ABBV. So we went from a 20 share position to a 40 share position in ABBV to bulk up the healthcare exposure. I was thinking about doing it with J&J. I didn't. I opted up the the AbbVie position. I doubled up my Boeing position today. That ought to get some comments in the group. Jesus Christ. Yeah. What a wild ride that's been. That's been fun. But see, Boeing is one of those funny stocks that I'm going to give to my children someday. So buying it today down 23 bits was kind of a no-brainer to me. It just popped there. I was monitoring it and it was down quick there in the afternoon. So I doubled that up. So 10 shares now of Boeing is what we're working with. Took another starting position in Prudential. Should have never sold the shares. Did, no problem. Get my over 4% dividend. I believe forward PE still might be less than 10 on Prudential. You guys can check me if I'm wrong, but on valuation, it's still extremely inexpensive for such a good insurance businesses. MetLife, AIG, and Prudential, quite frankly, all three fall into the same category. So intriguing enough if you're looking for some dividend yield, which I was looking to boost that up and get a safe and secure business. Unfortunately, in financials, I'm pretty strong in financials, but I did add BlackRock back in at 10 shares. Took that into a trading position, absolutely executed it perfectly. This doesn't happen all the time. I'm just being transparent again. I'm going to toot my horn for just a little bit. Again, when I make a dog crap trade, I'll let you know too. I don't care. It happens in the stock market, okay? And then finally added Raytheon back into the portfolio, 10 shares there. And 30 shares added to what was a condensed VTI position from 60 down to 10. Took some killer profit there, added 30 back in to render. We're at 40 right now in VTI. So took those positions. That's more on kind of the value side of the house, right? But just give you some idea how I've channeled those stocks just this week to render some short-term trading profit within the Roth IRA. Short-term trading profit, free of charge, free trades, free for free. You'll notice the theme here on the Independent Investor channel. A lot of valuable information being rolled off the cuff, free of charge. Just sit back, drink your adult beverage, enjoy yourself, consume away, okay? This is really where it starts to get interesting the second hour because I usually hit my stride in the second hour. So great to have everybody here. Everybody's holding true. Appreciate you spending some time with me. You don't have to stay for the whole live stream. I understand if you have to kick out, put the kids to bed, or whatever you got to do, take a little break. I understand. So, anyway, the one and only Doug Whitaker has been kind enough to offer some stock ticker symbols in the group here. Appreciate that, Doug. Thank you. It's a given that we're excited to see Ryan. I was feeling a little bad there for a while. You guys were giving everybody's excited to see the one and only Doug Whitaker. Why? Well, because there's only one of them. For starters, and I wanted to remind the group that there's only one of me as well, and I was just kind of feeling left out a little bit. No, I'm just kidding, man. So, Hidden Freedom Investing already given a shout out there in the group. I've got Avi A in the group as well. Great to see us. This happy Friday. Love it. J&J came up in the pre-funk era before the live stream tonight. I was considering hitting J&J today. J&J is a buy. Price to itself historically is attractive right here. So we'll watch it. We'll continue to watch it. I don't know if I'll double up that position like I did. I already have a pretty big position. I think I've got 22 shares of Johnson & Johnson. You guys can correct me if I'm wrong. I just rolled out that in the portfolio. I believe it's 22 and change for J&J, but may look to just exercise my right to hold, monitor the stock. If it adjusts back, I know Hidden Freedom Investing had talked about an option there to maybe have it called to them at 127, I believe, at a strike price. So that was an interesting way of playing it for sure. It's almost already in the morning with today's reduction of 5 bits. I think it went down. It may have went down more than that. The market really tailed off at the end of the day today. He says I nibbled a bit today. Yeah, I did a little bit more than nibbling, that's for sure. I don't have the dollar amount of the shares I bought, but I'm quite certain it's up over 30 grand. So a little bit more of a nibble. So anyway, like I said, Gen X dividend investor popped into the group. I always appreciate him. Looking forward to catching his newest video was the AbbVie video, and he does nothing short of a production over YouTube. So encourage everybody to kick over and help support that new offering. I know he works extremely hard on those releases, and it's the least I can do to push out the plug on the Independent Investor channel, help support that great content, that great content. I mean, it's really, really good. Better than some of the major channels that get really a lot of the love and all the support on YouTube. I don't quite understand it. I don't really care to, but I will acknowledge good content when I see it. And it's typically coming from these smaller creators. Hopefully I'm in that category as well. I work pretty hard at providing as much value as I can for people. Absolutely. Good stuff. I've already hit Adriana's question. Appreciate and nice to seeing you pop in here to the group, and I appreciate your question. Good stuff. Now we're cruising through and we're making some progress. I've got Mr. Eric Weber in the group. Had a boring week. Added some more Pepsi. That would have been easy to do, I think. And of course, the pie buys and M1 spread out throughout the week. Interesting. I haven't touched my shares in Pepsi. I've been a long investor in Pepsi. The Coca-Cola position, ticker symbol KO, was relatively new. I think I've held KO for around 6-8 months, something like that. But it took a downturn into the high 40s, maybe the mid 40s there for a while. So just today, it actually popped back into the black for me. I don't really care, to be honest with you. I'm not that naive to think that every stock that I'm going to buy is going to go up. Seemingly every stock that I buy ends up taking a dip for a while. That's not true. I just typically pay attention to the ones that dip for a while. But like I said, Coke had a good quarter. It was good. It's nice to see that they were able to put something through that was positive, and it was positive influence on the stock today, at least a couple percent anyway. So got me back into the black there. Scanning through here, JMac Investing, a good friend of the channel, popped in. It's great to see you, Jason. Thanks for the support coming in and helping us facilitate the discussion. Mr. Greg Cammy, who is probably one of the top commenters on the channel, just a staunch supporter of the message. Therefore, that makes me a staunch supporter of his initiatives. And if there's anything that we could ever do for Greg Cami, we will do it. We will absolutely do it because I just appreciate all of his insights. Very, very sharp, very, very philosophical with his insights, and really helps try to get to the point of the message that I'm putting through. And I think he kind of resonates with my message a little bit. That's at least what I get in the back and forth that I have with Greg most of the time. I think it's special. I'm glad to have him as part of the community. It really wouldn't be the same without him. And then Luna's channel as well, kicking in here. I really appreciate your time again. I gave you the shout out at the beginning of the live stream. I'm not going to give you another one at minute 10, although we do have a pretty strong and robust group in here. Hopefully I can get to the bottom and get some to the, that's usually where the meat and potatoes of this live stream lie, at the very end of it. And I usually can't get to everybody, but Mr. Jared Odell, always acknowledge when he comes in to help me support the message. We'll be having a huge retreats one of these days, and I'll be putting a face with a lot of these names someday. You think I'm joking? I'm not. I'm not. I don't do anything without meaning. Okay. And the last thing that I ever want to do on YouTube is just to come on here to grow an enormous channel and have it be shallow. I believe wholeheartedly in this message. Those who come on to consume my message, maybe I give them a little dose of motivation. I have plenty to give around. There's a reason for that. I'm so happy. I'm at the point in my life, and have been for a long time, where I am addicted to giving back. And this is exactly my outlet. So thank you for the folks that come on and help feed that fire for me. And Jared Odell has just been an absolute rock solid person in the community. Just one example, just one, who I think probably came on to the message and understood what we were putting down, and has deployed, evolved, and helps me immensely facilitate this message for new investors and get them excited the way we were at some point new investors, right? So big shout out to Jared Odell, who's in the group here. Really appreciate your time. Everything looks and sounds good. Thank you, Mr. Bob. I appreciate it. This is my $80 microphone that you guys are seeing, the very top crown here. So the sound that comes through on the live stream should be of top quality. And I have LEDs in my face right now. That's how I brighten up this corner of my living room. Okay, so we're not in a professional studio. Again, you get what you pay for. Remember? Okay, none of you guys will receive a bill in the mail for consuming the Independent Investor Channel live stream, yada, yada, yada. It's all free of charge, okay? You consume at your leisure, okay? Good stuff, man. Luna says, you're the best. Yeah, I don't know. We're just doing what we can. We really are. In all sincerity, I'm doing a little experiment on the channel right now with the daily upload schedule. Financial investor right above says almost 17,000 in subs. That is true. Again, I've repeated many times, I value the relationships of the familiar thumbnails that I see come in and help me participate in this message. The folks like Jared Odell, folks like Noella, who we have history together because we were brought together through the channel. That to me means so much more than a subscriber count. Okay, so if we can continue to grow the channel, great. As long as we don't compromise the integrity of the message by doing so, we want to reach as many people as we can. And I'm satisfied with the influx of new folks that are making their way in saying, hold on a second, somebody recommend that I go check this guy out. That means so much to me, because I have an obligation, because it's based on referral. And I look at the analytics, guys, okay? I know how many people out there be like, hey, Jesus, you might want to check this guy out. This is not run-of-the-mill stuff. This is interesting stuff. This guy does invest, talks about investing on his own, which is a very scary proposition for most people. And it's very intriguing for a lot of people out there who might not think that they can resonate with the message, but they come on and they're like, hell, I want to have control over my own money as well. A lot of people can relate to that. And I know there's people out there who need to come on to the message. They need to because it will bing enlighten. It really will. Okay. Because a lot of people don't think that this stuff is possible. And I'm living proof that it absolutely is. Okay. All right. We continue. Got Mike O in the group here. Of course, All Good is just awesome supporter of the channel. Mike Buffington is right below, and we've got Matt M here in the thread. Great to see you guys. I appreciate you coming on. This is how I know it's Friday night. Yeah, I know. I've got everybody in my live stream. I'm not really sure if some of the other channel creators, some of the big channels, the big powerful, you know what I mean? The ones that are just more powerful people because they have a huge YouTube channel, will start to compete with the independent investor channel. That's okay. Maybe someday when we get up to like 200 or 300 live streams straight, and we've been doing it for, 2 or 3 years, maybe we'll get some people's attention. But here's the thing. I only want people coming into the live stream that want to be here. And I don't think that 2 hours, a lot of people would be like, Jesus, this guy throws down for 2 hours. Yes, I do. But you guys are witness to the fact that I typically don't stop talking. And when I do, I've lost my voice. It's gone. It's gone. So it takes me a week to recover. And then we'll throw down next week for live stream 69. But I really appreciate that. And like I said, Noella, who's in the group here, these are the types of relationships that I value, and she knows what I'm talking about. And I will leave it at that. But that is where I put the value in this channel, no doubt about it. I would rather have one Noella than 1,000 other subscribers that really just don't want to relate to the message, or don't want to be critical of their own program, or they don't have the ability to listen. That's a big deficiency. If you don't have the ability to sit, guys, anybody in this community could look at my portfolio and say, Ryan, I think you might be a little off guided here. I would listen. I would. I really would. Now, you have to understand that I find a lot of value from a fresh perspective. If there's somebody that's new to the market and say, Ryan, why did you do what you did in this portfolio? It may be a decision that I've made based on my experience that to the untrained eye may not make a whole lot of sense, or they may not see the underlying perspective that I take on that particular move in the portfolio. That's totally fine. I don't have an ego problem. People can look at it and say, Ryan, you're crazy. You're too heavily levered to stock. Ryan, you have too much cash in your portfolio. All right. Those are constructive criticisms that I'm absolutely open to. And I think it will benefit anybody that prescribes to that method of self-assessment. Very important in the market. All right. Got Chris Cobian in the group here. Appreciate you coming on. Awesome. Is the live every Friday at 9? Yes, it is. I throw down at 9 o'clock Eastern time. Typically when I miss a Friday, I'll roll it to either Saturday or Sunday, but I don't usually miss the Friday live stream for any reason. I've yet to have to come on and perform sick, but I'm typically very aggressive on rolling this out Friday night. I think it provides a ton of value. It's informal. It's fun. People can come in. They can participate as little or as much as they want. I like it. It's good. I'm in my element. I really like it. It's a lot of fun. Thanks, Eric. Nice to think I'm still young, kinda. Investing in CRM, Twilio, Splunk, VEEV, Adobe are a few that come to mind on my watch list. Those are all correct. Yep, Avi A is providing the cloud plays for that. I think Hidden Freedom was inquiring about the cloud play. I certainly wouldn't forget Microsoft or Amazon in that. And I find it interesting because when I reviewed the mystery portfolio, holy smokes, man, if I was working with that type of money, where are the names like Google, for crying out loud? I mean, good God, man. Like Booking Holding, one of the best discretionary growth names out there. And nobody ever talks about it on YouTube. Nobody. Why? Just because it's $2,000 a share? Talk about it. You know, Amazon, come on, if you're that aggressive an investor, man, pony up. Get rid of the garbage and buy the big dog stuff, you know? I'm tempted. I'm tempted every day to enter into those fine companies. Google's number 3 on the list, and I just took 2 off of them today. 30 share positions each in Facebook and CRM Salesforce. I love both companies. I love Adobe's my favorite out of those. Um, CRM being the obvious favorite because I put my money in there, but I've invested in Adobe as well. Made good money with the company, very well run, an excellent company. I think you could do well. The other ones I don't know quite as much as I probably should. But anyway, they're listed there for you guys in the thread here. Appreciate you adding those. Matt M, Gen X, and Freedom Investor. Nice to see you. Saying hello from Canada. Awesome. It's making connections. You guys know each other. That's really cool. Come on and help support us. Really appreciate it. I'll take a look at these. So there you got your connection. 42 was 13 years ago from Eric Weber. It's just life doing its job, my friend. It's just doing its job. I got Kenny Eugene in the group. First time y'all just subbed. Love the content. Well, I always try to turn back, justifying that love for you. Okay. What I mean by that is I can turn you on to the message, I'm pretty aggressive. I'm very transparent, providing the real niche on the channel. But my goal for you as a new subscriber, just like any other new subscriber, is to make sure that the information that we put through is usable for you. What I mean by that is if you're going to deploy some of the information, make sure you understand why. Make sure you understand the benefits. That's huge. Understand that dollar in a self-directed account, how much different it's going to act than it will act in a managed account. If you can explain that to me, I'll give you kudos. But what I will say is welcome to the channel. I love when the new folks come on. I love it because I feel like there's an opportunity for me to at least explain my case, provide some awareness where nobody else is providing this type of awareness. Okay. If you watch CNBC, you've got folks like Ken Fisher who come on every other channel. And it's like, oh, I've seen some doozies. Therefore, there's no other choice but to crawl to me for help. And by the way, I don't help people with less than $500,000. Go read the reviews online for Fisher Investments. You really want to validate why you come on and listen to a raw, uncut message over YouTube from a guy that's not wearing any socks right now? Because the information's legit. I don't need a suit and tie to sit here and talk about legit information. And that may turn a lot of people off straight up. They may come in and be like, what? This guy has blinds in his background? There's no way. There's a plug in the lower right-hand corner of his video. This is not professional. I beg to differ. I would say cut through the chase, get to the information. You could probably plagiarize my information, take it, use it, abuse it, and actually fall on your face and succeed in life. Never to have turned me on again, but give it a chance, okay? You might find that this information is extremely liberating, and you'll start to question why it is that it's not more openly advertised. Saw a couple commentators on CNBC the other day struggle with identifying the discount brokers out there when all the majors started to race to zero. Remember that day when I believe it was Charles Schwab, if I'm not mistaken, that was the first one. Is that correct, guys? I believe Chuck Schwab came out and said, we're going to no fees. We're cutting out the 9% of revenue going to zero, right? So it was like, oh my God, what? They're not how can they do that? So what the heck is going on? Well, we have revolutionary programs out there. Robinhood is coming out, and I believe there's a few others. Well, Webull has commercials on their very channel. But I was waiting for them to name M1 Finance, and they did not. Now, if I'm getting a different pulse from the YouTube community, M1 Finance is seemingly a very popular product. I'm a user, and I'm critical of the program. I think it's very good for an entry-level investor, et cetera, for a passive investor, not an active investor, a passive investor, somebody who wants exposure to the market, is going to inject money on a schedule, good to go. Let that money grow over time, adjust, fluctuate, no problem, okay? But I found it very, very telling how these smarties on TV failed to acknowledge where some of this outflow from mutual funds is actually going. It's because the groundswell from people like us are throwing the bullshit flag and saying, I've had enough. I don't understand why we have to pay so much for the services rendered. Can you explain it to me? And the commercials come on in a condescending way, and oh, it's complicated. That stuff pisses me off. I want to throw the couch actually through the television when I see stuff like that, because people are being led astray to think that they're not smart enough to trip and fall into the S&P 500. It's the easiest thing that you can possibly do. I would contend that it's just as easy as starting a savings account. So, with that said, we will continue to beat our drum on the Independent Investor channel, and we will welcome new folks. And I typically say congratulations, because you have just turned over a leaf to a whole new world. And this stuff has the potential to affect your finances in as large or as small a degree as you see fit. And that's the beauty of it. I'm just here to open the door for you. It'll be up to you to walk through it. All right. Congrats and welcome to the channel. I'm super glad to have you. If you have any follow-on questions, man, hit me up. I'd be glad to help you. I do leave the email. Somebody hit me up and asked for my direct email. I leave that on the channel page, ryan.independentinvestor@gmail.com. You guys can hit me up anytime. I get a lot of emails, so give me a couple days to respond. But I'm glad to vet those requests as appropriate. I enjoy it as well. Says, thank you. You're welcome. So glad I never fell victim to the managed account. Oh, I did. I did. Hidden freedom investing. And I don't know how old you are. I don't mean to pry. I'll tell you what, I'll offer the fact that I'm 42. So I fell victim 4 times. And you want to talk about some doozies I've got stories, like all my fishing stories are true and all my investing stories are true. No need to fabricate. Went in with $10,000. It was a cashier's check. It was a big fishing check that I got. And went in to a managed portfolio with, at the time, was Smith Barney. Okay. And now it's Citigroup. And get $10,000. Okay. I want to invest. I have no idea what I'm doing, but hey, this mutual fund looks good. Of course it does. Yep. So I invest, right? What ends up happening is they didn't invest the $10,000. It sat in the money market account for months. Market went up 200 or 300 bits, which was a lot when this happened. It was a lot for the Dow to go up. And I would have been up like $600. And I went in there and I was like, hey, what gives, man? This is crazy. I just checked my account. I've made like $2 in interest in the MM account. And they were like, oh God. They actually had to back pay me the money. Anymore in today's society, they would have been like, you're out of luck, son, and what are you going to do? Sue them? You're just the little guy. Everybody in this community is just a bunch of little guys and gals. We're just little guys and gals. Okay. I don't have money to slang a lawyer every time I get, somebody telling me that it's too bad, sucker, even though I'm right. But yeah, they ended up paying me back. It was $600 that they ended up basically giving me credit for. If I would have invested in the market at the time, I took my $10,000 check in there and said, hey, would you mind investing this money for me? I've got a lot more. That's for sure. But yeah, it's funny you mentioned that. And I do aim my message at the younger folks, because this message in the hands of a 20-year-old, you have to be able to get past my boisterous approach, or you have to be able to get past some things, because I don't think I relate very well with super young people. Hopefully I'm wrong, but 18 to 24, if we can get to those folks and they can get past the message and be like, okay, Ryan, I get it. Calm down a little bit. I get the message. That's great. Those are the people we're really aiming towards, because this information in the hands of our youth is empowering, quite honestly. And I hope I'm not letting the floodgates out on empowering a generation of folks that aren't willing to make good, positive change in the world. I just believe I am. I believe that generation is absolutely capable. These kids nowadays, man, they're so smart. And if I have to be just one voice that says I believe in you, then so be it. I'll be that voice because I've seen it firsthand. I really have. I think there's just a ton of good in these youth. They're capable of doing stuff that our generation's not capable of. And I'm thankful for it. You put me with a group of millennials or a generational gap with a team, we're powerful. We can move mountains. It's an amazing thing. So Matt M says, Ryan and everyone, I have a question. Been following the channel for over a year. What are your thoughts about low PE ratio companies in a looming recession? Absolutely, right? So Prudential is one of them. Um, I think Prudential is probably one of the best examples on the list I have. CVS, I believe, is fairly low PE. I may take that back. PE has to be looked at from a sector perspective. Okay. So, what I mean by that is, I think valuation from Facebook is good, trading at 40, 30, 35, 40 times right now. I'd have to double check, guys, but I think I'm pretty close. CRM, I think, is like 87 times. Why did I buy the stock? Was it based on PE? Not necessarily. Okay. It's just a growth name, but financials trading at about 10 times forward. So you have to look within the sector to kind of determine whether or not it's a good buy. But I'm going to tell you, PE is one of the best metrics I look at. I do enjoy the PEGI ratio. PEGI ratio that's less than one is typically very attractive. Price to earnings to the year-over-year growth. If you want to know how to figure that, go to Google, guys. Good grief, it's very simple calculation. Or you can go to FICIV or FISERV or whatever the website is. It's one of the search criteria that you can put in there and look for stocks with less than a PEGI ratio of one. Kind of interesting filter to put on it. Usually, a lot of companies will come up that I'm not interested in. Very, very rarely. I think Alibaba is looking like it's coming close to that below one PEGI ratio. Most of the filters in your guys' major brokers will allow you to search that out. But in a looming recession, I don't know if I typically would look at my portfolio now and say that I have to do a bunch of radical changes. I would say the most radical change that I've put on the portfolio is shying away from some growth stuff. Um, and I don't typically look at Facebook from a valuation is a growth play, but I see a lot of value there in Facebook, and it's a company that I wanted to invest in. I want to have that access to Instagram. I'm a big believer there, as well as CRM, but I'm staying a lot away from a lot of the high beta names right now, especially Tesla. And I don't even put that in the category IPOs like Uber. Good grief! I mean, I'm talking about great companies like Netflix, Nvidia, great companies. PayPal, I mean, I'd rather opt for a Visa name there, but not really touching a whole lot of the high growth stuff right here. I think they'll be first to be hit. But I think if you're rolling with some of the highest quality, we're talking about AbbVie, J&J, AbbVie being a dividend aristocrat in the group, some of your industrial names. Good grief, guys. I did sell two stocks this week on valuation, and both of those I think would have done fine in a downturn. But the price to earnings ratio on Home Depot and Costco, in my opinion, have just become too rich. I didn't want to own the stock anymore. It doesn't mean that Home Depot and Costco aren't two of my favorite companies. It just meant that it was time to parlay those, take the profit out of the portfolio, and I'll live to fight another day. Now, I'll continue to monitor the stocks, right? And it look to fight another day. I'm not kidding. I'll look for my opportunity in both of those stocks. But I'm not going to own it north of 300 right now with everything that I feel is going on. Right, wrong, or indifferent. That was the decision that I made, and I impart it to you now. That's two names that we chopped out of the portfolio this week. So um, only been investing in ETFs so far. So that's a great way to gain that diversified exposure. Unless you want to invest in the mystery portfolio, I would premise please don't invest in that mystery portfolio. I don't believe I have to say that to this group, but I shared that for visibility, not necessarily. Now, if you invested in it, I get like $5. It is not worth $5 for me for you to invest in that mystery portfolio. So please heed my warning, read the description that I put in the bottom of that portfolio. That's not actually to be invested in nature. Okay? Responsible investors don't do that. Okay? Cool. That's the Surgeon General's warning that I'm going to put out on the mystery portfolio. Okay? I set you guys up for success, not failure. That's a terrible, terrible remedy there. Behind every stock is a company. Get to know what's behind it. Retro Amplification, Minnesota. Really appreciate that comment. That's really, really true. And that's really why we strive to at least at least in most cases to invest in the best companies that we can find, strong established companies. The dividend, yes, does play into my decision. A strong dividend, okay. Dividends are going to be different from an energy sector to a healthcare sector to a financial sector, going to be different, okay. Where I would expect a little bit more of like a 3% in the staples, a little bit more of a 5% in energy, a little bit more of a 5% in telecom, right? You get the picture. Financials from 2 or 3%, things like that. Okay. But I think you're absolutely correct. I think that's super smart. We all need to be better stewards of knowing the companies behind the scenes before we consider it an investable asset. Absolutely. Um, I think a lot of that is a lot easier than people think. It really is. I just think that so many people try to outthink the market, and again, not to come back to the mystery portfolio, that's a portfolio that's indicative of someone who thinks that they can outsmart the market. Like they've found a company that is going to render them some sort of riches that there's 2,000 other analysts out there that aren't looking at, that are not buying the stock. It just, don't try to outthink the market, okay? Sometimes the best ways of entering into the stock market, and this is regurgitated in many, many investing books out there that talk about the importance of just buying the best quality companies out there that render a nice dividend, have increased their dividend over time. It's probably the easiest way of creating wealth for anybody, no matter what your income bracket is in the world. It really is. Yep. Yep. And so it's not to be ignored. It's to be at least acknowledged, to say, hey, this might be for me, or no, it's not. Hey, I'd like to take the ETF route, the passive route. I'm really not willing to step into single stock at this point. Okay. Any opinion about Boeing? Well, I bought 5 shares today. I've got Javier Gomez here in the group who's popped in, and yeah, long play, absolutely. Cornerstone in the portfolio, yes. Industrials is really one of my favorite sectors. It really is. It's right there behind healthcare. It's right there behind technology, which is number one. I enjoy investing in healthcare. Um, Materials is one of my least favorites, to be honest with you. Now the newly formed telecom sector is really in some flux with introduction of 5G. It's interesting seeing Disney switch from a discretionary to a telecom sector. Interesting. It's probably more fitting, but it's just different for me to have that mix up. But because I always looked at telecom as being your AT&T, your Comcast, and your Verizon. But yeah, I mean, if that tells you anything, I bought 5 shares today. I doubled up the position. I now have 10 shares and some change. So I'm long the company. I don't really care what it does, to be honest with you, from here going out. Whatever it is that it is. So Jared Odell, I just noticed his comment. He says I'm a buyer. Um, I concur. That's just where I'm at. And you guys know, I mean, I can't give investing advice. I'm not a financial planner. I do this for entertainment purposes only, yada, yada, yada. There's the disclaimer. However, I can tell you that I bought it. That's just what I did. And I run this channel as a testimonial. So do with it what you will. It's there's obviously headwind going on right now, some major fines coming down the line. It is risky with anything, but I just when I put my money into a company, think about what you're buying. 3M, Caterpillar, Boeing, you know, Cummins, I would throw into that as well. John Deere. Um, those are the types of things that I think about when I look at the portfolio of them. And 3M is a diversified business in and of itself. Honeywell, UTX. These are all companies I own, and I own them for the very simple reason that it's an absolute pleasure to be an investor in all these fine companies. It's easy, gaining a small fortune by doing so. And if you pay attention to the message, you could probably look to get some interesting entry points in some of those stocks right now. 3M, I'm not really sure if K97, if he's in the group right now, is going to get his 140 entry on 3M. I think it's over. I think it's headed back to 200. That's what I think. So we'll see what happens. But 3M, I mean, I don't care. Being an investor in a company long term, from a perspective of owning a Boeing or a 3M or a Caterpillar, is just you know, it's there's no need to think that you have to find that perfect needle when you're talking about great quality companies. Now, finding an optimal price, absolutely. But how much more downside do you think there is in a Boeing? I don't know the answer to that. Nobody does. How much downside do you see? Caterpillar's already started on its way north, and 3M has done the same. So, make your own investment decisions. I've been long-term investors in both. Just doubled up my position um, in Boeing today. That should tell you a little bit about how much I believe in being an investor in the company. Okay. All right. Hidden investor looking to give out some single company exposure. From everything I've read, PE ratio is very important. It is absolutely 100% very important. Any other factors I should look at? Let me talk plainly, because anybody can go onto the New York Stock Exchange and read the reports. Any of your major brokerage houses are going to allow you access to the balance sheets. You can go onto the individual company website and certainly get into the Q&A, the investor section of the actual company's website. That's easy enough to do. And finally, there's the conference call. Okay, so there's the publicly disclosed information. You can read the 10K filings as well through the SEC. You can also read analysts' report, which is something I enjoy doing. I'm not one of those guys. These YouTubers are funny. They're like, nah, all analysts are idiots. No, they're not. They are not. They are smarter than me and you, actually. So why don't you get over yourself a little bit and maybe just objectively take a read over some of these things? You'll learn yourself up a bit. But these cats that do this, they do this for a living, and they get it wrong sometimes. That doesn't mean that they're idiots. Okay. You are a YouTuber. Calm down. But it is just one facet of information that I would particularly look at. Now, that stuff aside, let's talk turkey. Do you need to read all that stuff and go on to the investor blog or listen to the earnings call of a company like an Apple Computers? Um, if you were interested in opting into a company like a 3M, for example, or a JP Morgan Chase, um, is that something that you would want to do? So, from an awareness perspective, it definitely benefits us to throw all of that information out there. Anybody can. How many people have gone to the New York Stock Exchange website? I would contend that there's probably a lot in this community right here who have never went there. You can find any stock there that's listed and find any of the information that I'm talking about. I prefer to do it through my broker, and I have multiple platforms. So First Trade is okay. M1 Finance is terrible, in my opinion. Merrill is amazing for data and analytics. I can find anything I want on a stock. But when I say buying the best quality companies out there, you have to be able to relate with the company that you're investing in. Okay. So if you're interested in seeking out an investment opportunity, and I don't know, Matt, so I'm addressing Matt's question right now. If you're a young person, if you're married with children, if you're middle aged, I don't know if you're 58, I don't know. But let's use Disney, for example. I'm interested in Disney. Identify what sector it's in. Okay. You're going to be able to run it through some screeners, read a few. I like Morningstar. It's my favorite report. It gives you everything that you could possibly need, whether or not they feel, based on the metrics that you can figure on your own and learn on your own. They've already done it for you. Where the PEGI ratio is, PE, et cetera, and down the line, earnings per share, all that stuff. You can pick up that information in those reports. After you've consumed all of that information and you feel like Disney, yes, is a company that I want to be an investor in, the question becomes, do you want to buy one share of the company, or do you want to buy a 5-share block or a 10-share block? And I typically, when I look at a block of shares, that's the way I look at them now. I look at the price per share. Let's say Disney is trading at 140, 10-share block of $1,400, half of that $700, et cetera, down the line. That's how I break up the money. 25% down the line is 350. So that gives you an idea of how many shares you could potentially fit into the portfolio with the actual company that you're looking at. Now, when you're looking at adding single stock exposure to the portfolio, I would encourage you not to try to buy the entire stock market. There's an underlying reason why I do my portfolio reviews. Go on and look at mine, okay? Free of charge, okay? I openly disclose what I have. The losses, unrealized, of course. I don't claim losses in the portfolio. I don't sell stock for a loss. I take that back. Most of the time, I do not trade for loss, okay? It bugs me, so I don't. But there's some unrealized loss in there, but you'll see there a portfolio that is indicative of an old oak. It's been there for a long, long time. You're not going to get there overnight. But if you're interested in growing a stock portfolio, start slow. Okay. Enter into that one name. Maybe you want to add some shares, or you have the means to add some shares every single month. Maybe you buy a share. Saw one comment pop in here that said that they were buying one share of Disney every single month for their daughter or their granddaughter, I believe, if I'm remembering correctly. I'm pulling this from memory. I'm not reading it from the thread. That is awesome. There's an inherent lesson there to say, wow, I'm so excited about investing, Ryan, but I don't know where to start. Well, there's all kinds of different plans to put yourself on a schedule. The ability to enter into single stock or buy one share every single month is there now. Why? Because they don't charge you for that entry fee anymore. So the disincentive has been removed. And it gives you that ability to do that. That is an amazing, amazing opportunity, guys. It's really never been a better time to be an investor than right now, because the opportunities that you guys have are just incredible. The ability to accumulate these stocks to own forever, Apple computers. I did provide Procter and Gamble as one of those who's just been an absolute fireball this year. I don't own it. A little sore spot for me. That's all right, though. Okay, I own the other 4 stocks to own forever. Apple Computers, Johnson & Johnson, JP Morgan Chase, and Walt Disney Companies are mine. Now, I could get into a debate with anybody in this thread, especially some of the channel creators, and they would say, not so much, Ryan. I think Pepsi is better than Disney and the stocks to own forever. Awesome. I own that too. So there's a ton of stocks that could fit into that category of investable companies, man. Look at the Dow 30. That's a good place to start. How many companies can you name out of the Dow 30? Right? We've named a couple: Costco, Home Depot, Travelers, right? That's one. Johnson & Johnson, Apple Computers. Okay. Start to understand some of these companies that are listed with the Dow Jones Industrial 30. Okay. That's usually pretty indicative of your blue chip companies. Okay. And that'll be a really good start for you to sink your teeth into some of those best of breed. Heard of Microsoft? Ever thought of being an investor in the company? I am. Okay. Don't make it more difficult than it needs to be. So, the reason why I premised that answer with all of the stuff that's out there, right? The 10K, all that information, which is so available nowadays. It was not available when I started investing. That's why we typically had to rely on the services of a financial investor who we entrusted with the expertise, right? To provide those recommendations to us as the little guy. I just don't believe in that anymore. I don't believe that there is such an advantage to the money managers to where that information isn't just as easily available for the investors, the self-directed community, or the individual investors um, anymore. So there's really no excuse if you choose not to seek out that information in whichever form you choose. I can disclose to you guys, to be honest with you, I have built and amassed quite a fortune in my portfolio, and I do so relying very little on reading 10K reports. Okay. Honestly, because I contend and I come back to I pay attention to the stock market and my awareness and um, sixth sense a little bit sometimes to say, I like this Apple position, but I want to take a little bit off the table. Did that this week too. Trimmed that position down to 12. That could be the wrong decision, but we will see. Made a small fortune, as I've done many, many times channeling Apple computers. I will have my opportunity to inject back into the stock. But owning an Apple computers, whether it be in a downturn or an uptick, I could care less because I'm still a stockholder in one of my favorite, if not my favorite companies, which is Apple Computers, right? So you see how easy that is. It's not as if I'm going to justify it reading a 10K filing from Apple Computers and be like, wow, this is a very solvent company. They do great things and they make a phenomenal product. I, I'm now foresold. I'm now sold on the opportunity to invest in Apple Computers. My deliberation is so much more simple than that. And that may scare a lot of people, but um, I, I'm proving some things in my deliberation and how I build my wealth. And my method may seem a little bit um, um, a little bit renegade to some. Totally fine. I think there's a lot of people who can be better investors than me using my strategies. Okay, but I think where people really fall victim is not giving themselves enough credit for allowing themselves to evolve and maybe find some success in the stock market because it's out there. It really is. As long as you can get over a few roadblocks that will absolutely present themselves in the market, it's a humbling place. I can't tell you how much I mean that because it is. All right. Joseph Carlson makes the best use of M1 Finance. You prefer more advanced brokers. I like all your ideas. I think Joe Carlson is number one as far as how he utilizes. If I were Joe, I think aggressively funds his account. That's a real takeaway that I'm not sure if people really realize. He's and that's awesome. I think it's a testament to his aggressiveness on identifying how much he believes in his program, and he does, and he aggressively funds it up. With that said, I sometimes am intrigued at his stock choices. I think he could introduce, in one word, a little bit more risk into his program. He has the tolerance. He absolutely has the knowledge and justification behind it. He sticks with dividend growth investing as a philosophy, and he believes in it. However, I would contend that there are other ways of making money, and to leverage those other opportunities by deploying a different strategy may be in his best interest, because I know Joe could handle any uh, strategy that he could deploy. Right now, he's just building up the dividend growth portfolio. That's what makes sense for him. And that guy justifies every single move that he makes. I thought his best video was when he responded to the dividend irrelevance theory It was the best video that I've seen from Joe. I really liked this one too, Why You're Not Rich. I thought it was very good. But the dividend irrelevance theory was phenomenal. And there shouldn't be anybody in here still that doesn't take my advice to spend a few minutes watching that response to another channel creator who was endorsing and saying that dividends were irrelevant. And it was awesome. I'll just leave it at that. All right. We're getting kind of to the end of the live stream, guys. Don't want to be too long-winded here, but want to give it a good, honest chance here, getting down into the last few comments here. I want to make sure we're getting to most everybody. Hey, Google, show me the money. Laugh out loud. Bill Gross said Invesco is a buy. Your thoughts? Invesco is a buy. I fortunately and unfortunately own State Street right now. Ticker symbol STT. I think STT is absolutely a buy. Invesco is a great company. They're really good. I just am very heavy with financials right now. Please understand, I'm still a little underweight, but I like to have a good amount in financials. I own all the majors right now, as well as the BlackRock holding as well. I would love to add Goldman Sachs to the mix, but yes, Invesco is very good. I believe they render a fairly good dividend yield as well, but I'm watching State Street, which I'm underwater a little bit in. So that's just where I'm at. And I've parlayed my position in Blackstone Group, which is an alternate management, alternative asset manager. Invesco is a product offerer. But yeah, I believe it's a good company. From what little bit I looked at, I think you'd be okay. The stock investor guy is at the bottom of the thread here, throwing down on that. So I appreciate the question. I got GW Life TV. This is the first time I'm seeing, man, you got to kick in here earlier. And I can give you a shout out at the top of the live stream. I've got Money Matters in the group here at the bottom. All you guys kicked on here. If you guys come in a little bit closer to kickoff time, if it's possible, I will give you a shout out. And that way you're not catching the last 5 minutes of the Independent Investor live stream. Great to see you guys pop in here. But I think the shout out would have been a little bit more impactful, as I was probably in 6th gear at the top of the live stream. Now I'm in like 2nd gear, and I'm pretty close to downshifting into 1 and shutting the car off. But I appreciate you guys making your way in here, man. Very cool stuff. Stephen T is at the bottom of the thread here, says a 1 share of SPHD. I'm actually building up that position as well. I think I've got about 10 shares in SPHD. I like it. VGIT. So good stuff. And then 1 share of BSV. Awesome. You're slowly growing the deal, so I will try to make it earlier. That doesn't mean that the folks, there's still a pretty robust group in here, man. And on the repost to YouTube, I always try to give those shout outs to the channel creators, and you're no different. So if we can go over and support GW Life TV as well. Been pretty active on my channel as well, and try to provide at least a little bit of exposure there. Robert Cardware, Ryan, what do you think of Goldman Sachs and Morgan Stanley? I mean, they're both buys, man. It's legit right now. Financials, they've been 10 years, just absolute dogs. You're getting a 10-year opportunity in financials that's quite good. I want to make sure these little injects, these little upticks that we're getting. I mean, I'm back big in the black with JPM. I did own Morgan Stanley. I did sell it for a profit. Goldman Sachs is that's next on the chopping block for me. I opted for BlackRock today instead, 10 shares, which is a pretty hefty position of $4,400 of BlackRock, BLK. Both of those companies are phenomenal. Morgan Stanley is an excellent bank. And Goldman Sachs, I would love to fit both of those into the portfolio. I think you'd be just fine. Thank you for that question. That's great. I want some NOC. I already have it. 10 shares of NOC. I take that back. I own 5 shares of Northrop Grumman. But thank you. I've got Guts Berserk at the bottom here throwing that. But I do own Northrop Grumman as well. Awesome company. I bought all the defense back again, Lockheed Martin being one of them, and Raytheon actually being my favorite, to be honest with you. But Northrop Grumman is absolutely worth it. So first time here, I2, great learning channel. Eric Ortiz, fantastic. Look, we're looking to empower one investor to understand the power of investing on your own. And it is powerful. So you got to figure out how to harness the lightning bolt, because it certainly turned me on some 8 years ago when I got involved in investing, and it's been on ever since. It's amazing. It's amazing, and I'm sorry you guys had to wait till hour 2 to hear this from me. But if you could only see the difference between a dollar and how it works in a wealth preserved, self-directed account, as opposed to how that same dollar acts in a managed account, you would never go back to this ever again. Hell, you might just start your own YouTube channel, because it is liberating. Okay. If you don't believe me, look at my face. Okay. I know we won't reach everybody, but you'll get my best effort and try to reach as many people as we possibly can. I had a few picks here thrown. Is Boeing a buy right now? Like I said, I don't know if you just popped in, but I bought 5. Um, Look at his face, laugh out loud. Well, I'm not that good looking of a fella. That really wasn't the point, Money Matters. All right. That wasn't the point. The point was, I'm serious about this shit, and I really am. And it's worth taking a couple seconds to look at. Um, Boeing, I bought 5 shares today. I said at the top there about an hour ago that I had doubled up the position in Boeing when I was covering some of the strategic buys. I doubled up on 2 positions this week, which Boeing was one and AbbVie was the other one. So you guys are talking about Altria. Man alive. Okay, I missed it. It was brought up last week, and I commend the investment at 4 with the dividend clip. I get it. Okay, you don't have to sell me on the company. I get it. I would throw Philip Morris in there, and quite frankly, I'd be more attracted by Philip Morris than I would Altria. But Oscar Castillo says he's headed out. Ryan, thank you for your time and dedication. One day your message will reach millions. I believe we will, and if we don't, I will continue to strive toward that end. Absolutely. And it's the journey that matters. It's not necessarily the finish line. Take it easy. Have a great weekend. Okay. But anyway, it's really amazing. So, the difference between those 2 liberating dollars is very, very important. There really is a lot of buying opportunities in this bull market. There really is, man. I thought Prudential was a killer buy. Shouldn't have sold it. Facebook has come off. Some of the growth has come off. Google is starting to perform again. You just got to be selective. CVS is another one that's out there for sure. Worth talking about. Nothing too crazy. Stephen T says, smash that like button. I know, what is it? Money. There's another channel. What is it? I can't remember. Matt Money, who says, caress the like button or caress the subscribe button. It's kind of funny. Anyway, let me cruise up here and make sure that I didn't miss anybody. Just to be fair, I've called out, I've had at least 10 channel creators make their way into the group. Guts Berserk says, I bought Microsoft around the end of 2016. Awesome. Awesome. You're up fat profit. I like it. I tip my hat to those, man. There's lots of ways to make money in the market. And you're up on a long position there nicely. Indeed, Microsoft, since my purchase, is up 74%. Yeah, that's what it's all about. Yeah, just one small reason as to why we invest. Isn't that true? Good stuff. So anyway, with that said, guys, I'd like to keep it around 2 hours if I can. I could probably go for another 2 hours. We'll try to break the world record for YouTube one of these days. Tonight's not going to be one of them. I'm going to chill out. It's been a very busy week for me, but I just want to thank everybody. I say at the end of every single live stream that it was the best live stream I've ever done. Tonight might have been it. Tonight might have been it. I'm very proud of some of the things I was able to get off my chest. And for those folks that heard it and subscribed to the message for the first time, I'll say again, congratulations. It takes somebody like myself willing to give back and really understand that it's not just enough to come on and push out a message. there is more of a responsibility to understand that when that message is pushed out, to acknowledge how it is received. And with that, I will leave it, guys. Thank you so much for tuning into the live stream tonight. Have a great, great weekend. I expect to see all you guys back. If you want an earlier shout out, come on at 9 o'clock and maybe even leave your comments before I come live. I always leave the thumbnail on so you can go on and leave your comments in the beginning of the stream so I can hit those in order of precedence, guys. With that said, I will check you. We will catch you next week for live stream 69. Thank you again for supporting the Independent Investor channel. We will catch you guys next week. Take it easy.